Welcome back to another podcast episode of Finance X Media. Today we have a really good podcast for you. As you guys all can tell by the commercials on basically every single TV station, tax time is nearing. And in this video, what our focus is going to be is the tax organizers.
Yay!
We know everybody loves the tax organizers. As boring as they seem, they're
fun. They're a lot of fun.
They are super important. Some of the main reasons they're important, especially if you're a new client. If you're a new client, it basically is the communication between what you had last year and what we can expect this year to make sure nothing falls between the cracks.
New client or nude client?
Both.
Okay.
Also, if you are a returning client, one of the benefits is if you have anything new this year, whether it be a new dependent, you made IRS estimated payments, you received IRS correspondence throughout the year. This is a way for us to know all about that. And then at the end of this video, you should stick around because we're going to drop a gem on how you can write off all of your medical expenses.
What?
Yep, that's true.
You're
Nate,
a hero.
do you want to kind of go in and let us know about what to expect on the tax return in terms of the numbers?
I'd love to. What to expect when expecting. Standard deduction changed a little bit for 2023. It's now up to $27,700. That's half of that, $13,850 if you're single. Home sale exclusion, I love this one, very important. If you've lived in your house, it can even be months. There's ways we can exclude some of it, but you can exclude up to $500,000 of gains. If you live in a home.
Gains,
Yep.
not just the sale, it's the gain.
Yeah, so sometimes there's reasons people sell it before the 2 years that they've lived in it. There's things we can do. Retirement accounts, IRA limits are at $6,500. There's deductibility that applies. Backdoor Roth, I love them. Jaren's favorite thing in the world. Non-deductible IRAs, we convert them to Roth IRAs, and we can still do that. We have until April 15th to do those. Health savings accounts, one of my other favorite things. Write off your medical expenses without this loophole that we're going to talk about in a minute. $7,750 is the new amount there. Child tax credits revert back to 2021 levels. Medical deductions. So there is an exclusion of 7.5 of your adjusted gross income. You make $100,000 a year, that means the first $7,500 is not deductible. Jaren's going to tell us a workaround for that. Home offices, we like that, especially people working from home. There's things we can do there. Energy credits, I added solar panels personally last year onto my existing system. There's a huge credit you can take for that. So we want that information. We want to take those credits, Jaren.
And these are all going to be things that are on the organizer that are important. We're going to have a checklist on the organizer. It's kind of going to walk you through so you can use that as a checklist when providing your documents.
Yeah, we want to make it as easy on you guys as possible. And so a lot of clients are always asking us, can I write off this? Can I write off that? So on a tax return, you can really only write off any expense if you are a business owner, so you have a small business or a rental property. Yeah, exactly. And
or a small crypto business on the side.
Yes, a lot of people started
small mining. We call it mining operation.
So if you have either of those, or if you're an individual, you can write it off as an itemized deduction. So we're going to talk a little bit about all of those. So we also have attached to this YouTube video, we have a nice, easy to fill out worksheet for you for your small business or rental property, and that will just help you to actually write off all of your expenses, see what income you have coming in, and then you take out.
So if you have a rental property and you spend something on that rental property, or something that could be construed as spent on that rental property, do I get to write that off?
Yeah, you can write that off on your Schedule E.
That's fabulous.
And one thing to note about these PDFs that we're going to link down in the description is these are live PDFs. So please fill these out electronically. Do not print these out. We do not want to read handwriting during tax season. We want everything to be filled out electronically. That's what they're made for. That also prevents any mistakes in terms of misspellings or anything like that. So definitely fill out all the attachments electronically.
Exactly.
Perfect. So we can write off all of our medical expenses. How does that work? What if I go to the doctor and I want to have another baby, which I don't. I want to have another baby and we do like in vitro.
Okay. So on the federal, there is a limit. So there's a 7.5% of your AGI. Your medical expenses actually have to be higher than that for you to write off any of them.
At the federal?
At the federal level. But there is a way that you can still write off your medical expenses, and that's by writing them off as a state itemized deduction. And so, for example, Arizona is one huge example, and there are many others.
And in addition to that, we have credits that we can take on Arizona with the schools. We have, St. Mary's Food Bank.
St. Mary's Food Bank is a great
Tuition
one.
organizations, and that's dollar for dollar.
Foster care.
Foster care, you pay $800, you get $100 back, and you get a deduction.
Yep.
That is literally, would you rather pay Arizona Department of Revenue or donate to a charity? It's
Department of Revenue. Oh, wait,
No,
I just
you're
said
not
that.
supposed to choose that.
And ideally, guys, these are expenses that were supposed to take place in 2023, but they can be made up until April 15th to be able to take on the tax return.
Right.
Perfect.
And just because you have a small business or a rental property, you can still itemize. You can write off the sales tax for your boat and your mortgage interest. And
I can write off my new boat? Part of it?
Sales tax.
Sales tax, oh,
just
okay.
the sales tax.
What about my
However,
new little helicopter or my hang glider?
The sales tax.
the sales tax? Yep. So
love it.
Unless it's for business use.
It is. I'm going to use it for my business. I don't know what the
100%.
business is yet. 100% of it's going to go
Section
towards it.
179.
But you want to fly a helicopter? Unrelated.
I really do want to fly a helicopter.
So maybe in our next video, we'll all fly helicopters.
The only question I had for Jordan was returning clients, these organizers.
Yep.
Is the information from none of their personal information, but all their numbers are going to be in them, right?
All their numbers are still in there.
So they just can kind of go through and say, oh, this is what it was last year.
Yep.
Gotcha.
Exactly. And that is also a live PDF. So you can do everything electronically when we send this to returning clients. So everything's going to be a live PDF for you, so you don't have to print anything out. We try to make it as easy as possible for you guys.
And,
Love it.
And if you're a small business owner, you have a rental property, maybe you just want to write off the sales tax to your new boat, go ahead and make sure that you follow the link in the description. We're happy to help you out. These forms are to make everything easy on you so that you can really get these write-offs and start taking advantage, start enjoying the tax advantages of owning your business. So tune in next week for more tax tips that can help you with your small business or your rental property. And make sure to like, comment, and subscribe.
Finance X Media.